Hello students, I am Vipul Mittal, and in this session I will discuss initial recording of property, plant and equipment. Property, plant and equipment includes building, machinery, equipment, furniture, land improvements. So property, plant and equipment refer to those long-lived tangible assets that are used in production and distribution of goods and services. So these are long-lived tangible assets. Long-lived, that is, benefit from the asset should extend to more than 1 year. So you get the benefit from the asset for more than 1 year, not just 1 year, but more than 1 year. Tangible assets do not include goodwill, other intangible assets, financial assets, deferred tax asset. The property, plant, and equipment include long-lived tangible assets. And you generally record a property, plant, and equipment item at historical cost. So you record it at historical cost. This is a general rule. So all the costs that you incur to bring it to the condition and location necessary for its intended use. So you incur a lot of cost when you acquire an asset. You have paid a price for the asset. You also incur transportation cost. You incur installation cost. You also sometimes incur certain repair cost. So other costs that you incur to bring it to the condition and location necessary for its intended use so that you may use it for the purpose you have acquired. You have acquired this asset for a purpose, all the costs that you incur so that you may use it. So all the costs that you incur to bring it to the condition and location that is necessary for its intended use. So you acquire an asset and all the costs that you incur to bring it to the condition and location necessary for its intended use. That is the cost that you capitalize. That is the cost at which the asset is recorded. And this cost includes a lot of things. It includes the invoice price. It includes other costs that you have incurred, installation cost, repair cost, transportation cost to make the asset fit for the intended use. All right. But this is a general rule. It is not that you always record it at cost. Now, if you acquire an asset in a basket purchase, that is, you are acquiring a group of assets and paying a consolidated price. So let's say you are acquiring asset A, B, C, three assets you are acquiring in a group, and you are paying a consolidated price of, let's say, $90,000. So you have paid a price of $90,000. This is a cost of three assets. Now, in this case, you need to divide this $90,000 among asset A, asset B, and asset C in the ratio of their relative fair values. So let's say their fair values are given to you. So you allocate this $90,000 in the ratio of their relative fair values. So you allocate this among asset A, B, and C in the ratio of 2:1:1. And what journal entry you will do to record this? Asset A, debit, asset B, and then asset C, and cash. Although the fair values are higher, but you allocate this 90,000, you have only paid $90,000. And you allocate this among these three assets in the ratio of their relative fair values. You have paid a lower price, maybe because you are purchasing these assets in a group. You will allocate the cost among these assets in the ratio of their relative fair values. Now, what if the asset is internally developed by you? You haven't purchased it. If you have internally developed this asset, for example, you have constructed a building. So if you have constructed a building, it is internally developed asset. In that case, all cost that you have incurred in developing it is capitalized. So let's say you incurred cost on material, you incurred labor cost, you incurred architect fees, you also spent amount on getting licenses, you got electrical fittings done. So you have incurred cost on a lot of things. All those costs, all the cost that you have incurred in developing it is capitalized. So you incurred a cost of $1 million. This is capitalized. And there is another possibility that you have acquired an asset in a business combination. For example, you acquire a company. Now, all the assets and liabilities of a company become your assets and liabilities. One of the item is property, plant, and equipment. So earlier it was a company's asset. Now it is your asset, and you have to record this property, plant, and equipment in your books. At what amount you will record this? You will record this property, plant, and equipment at its fair value. Because you have acquired this asset in a business combination, you have paid a consolidated price to acquire this organization, a company. You have acquired a company and paid, let's say, $80 million to acquire this organization. When you have paid $80 million, you have acquired a lot of assets and liabilities. And one of the asset is property, plant, and equipment. At what amount you record this property, plant, and equipment in your books? You record this at fair value. Because you have acquired this in a business combination, because you have acquired this in a business combination, you are using the acquisition method to record the asset. I've discussed this acquisition method in another video where I talked about business combinations. All right. So you record this at fair value. So depending upon how you have acquired or whether you have internally developed it, you record this asset. So the asset may be recorded at cost or fair value, or sometimes you have to allocate the cost in the ratio of their relative fair values, depending upon how you have acquired it or whether you have internally developed it. All right, students, I hope this is helpful. We'll connect again. Take care.